Hello everyone, this is Alert Day Trading. The purpose of this video and the videos I make is to journal my trades, notice any mistakes I'm making, any good behaviors I'm doing, and try to minimize mistakes and duplicate my good behaviors. So today I was focused on, well, not just today, but lately I've been focused on increasing the quality of trades versus the quantity of trades. So I've definitely been happy with the amount of trades I've been taking in general. It's definitely been a lot less than I normally do. But I think with the amount that I'm risking, it's now, I still consider even the less amount of trading I'm doing to be overtrading. So I'm now realizing that overtrading isn't necessarily the amount of trading you do, but possibly taking trades that you shouldn't be taking. So for example, I would normally take anywhere between 5 and 10 trades. Lately I've been doing less than 5 trades, but with the amount of risk, if you're wrong just a couple times, you end up losing the same amount that you would have if you were taking, over 5 or even over 10 trades. So even though I'm taking less trades, I'm still losing the same amount of money on my losing days. So I now need to not just focus on the amount of trades, but the quality of trades. I would say in general, I've definitely improved the quality of trading, but I think now I have to increase it to a level that is potentially elite, especially if I want to become profitable in the long term with really big size. So my focus, and I think I'm going to commit for the rest of the week, I'm going to commit it right now, that I will only take one trade per day. And I've watched a lot of different videos, read a lot of different books, and this has definitely been an exercise that's come up for how to combat over trading. Just take one trade per day. So I've decided, so I trade the 1 minute, 3 minute, 5 minute, and very seldom, but the 10-minute chart time frames. So I'm deciding that I will take one trade only per time frame per day. Now I don't have to take a trade for every time frame, but that is my limit. So today, I was very patient. There was a lot of things that I could have potentially traded. Such if you go to the gap up scanner. So I was looking at, expand this. So this is the daily chart for CBAY. And yeah, it was gapping up, and you can see this move. It moved it very nicely, but still the daily chart's in a downtrend. Even with this move to the upside, there's still a lot of levels of resistance that it needs to break through. So now this is the quality I'm talking about. Normally I would look at this and say, well, it's in between these two levels of resistance. So there's still potential. But at the same time, you're also increasing the potential of a lot of sellers being here. So there's not too much upside. And even if it does break through, you're still, now you might have sellers over here. So just too many levels to have to worry about. I was really interested in NVAX. Here you can see it gapped up a lot, but so in the daily chart, definitely an uptrend, looked nice. But if we zoom out to the weekly chart, we'll see there's resistance levels over here. So I no longer became interested. Now, obviously, if it breaks through, I would say if it breaks through above this $55 mark, then the next level of resistance that I found was in the 80s. So in that case, I might take a trade. But so the point that I'm making for myself, and if you're listening and learning from my mistakes or learning from my good behaviors, is that even though things are moving and have potential to increase a lot, you still have to outweigh the negative signals, or weigh out the negative signals versus the positive signals. So for me personally, each of these red lines are negative signals, unless they're underneath the price. So here's the price right now, and so it's going to have to take a lot of buying. And so if there was a lot of buying and we broke through this level, then I would see potential of getting into the trade with good volume. And I didn't really, well, Mark, MARK, same thing, downtrending. This is the 3-year weekly chart, but the daily chart looked nice, breaking through. But still, there's a red line. And you can see it's pretty accurate. Lately, I've noticed that my analysis has been pretty spot on with prices reaching, because this price level comes from way back, from at least a year or two ago. And that's why you really have to pay attention to these red lines. I think they really make a difference. Anyway, so the trade that I took, I noticed on my scanner over, down here, it was DDOG. And here we have a daily chart with an uptrending daily chart. And then if you zoom out in the weekly, nothing. Look at that. And that was 3 years. Let's go back 5 years. Still nothing. And I actually think this might have had an IPO at some point, so it might not even go back that far. Let's see, 10 years. Yeah, it's the same thing. So it's not even that old. It's only a year ago anyway. So there's no resistance. The only resistance level would be here, and that it would be considered a support. So for my trading style, this is a great daily chart. And this is why the one trade per day is going, well, I have to still wait after, I would say, at least a few weeks, but just the first day that I even tried it, I ended up with a winning trade. So here you can see pushing up, pull back, breaking through this high, and this is where I got interested in the trade. This is when I started looking at it. So I saw the daily chart, no resistance, so I said, okay, if it breaks through the high, that's where I'll want to get it. So my first entry was with the 1-minute chart. And here it's breaking through the high. Now here's where it gets a little tricky. So I try to wait for the break above the whole dollar, because you can see there was resistance at $67. Failed to break above it. There was a pullback. Now you could buy right here, but the problem with that is the breakout above 67. You don't have confirmation yet if $67 is going to hold. So my style is to wait for that confirmation. So here's the break above 67. Then you have the pullback, and here you have support holding. So now you have a higher low. So this is looking good. So my order came in at the high of this candle. That's my 1 minute time frame purchase at the low, with the low of this candle. And I wanted to be tight on my stop loss because we're trying to trade, this is a bull flag, but it's also a breakout, and I don't want to be faked out. And if it breaks below this level, that's too much for my style of trading, of a retracement after the breakout. So I put it pretty tight here. Now we did get pretty close over here. We're about 10 cents away from getting stopped out. And so anyway, I entered that trade, and then basically the same exact thing I just told you, but with the 3 minute chart. Same strategy, same style. Here's the break above the $67. Here's that first red candle. So I added to the position with the break of this candle. And then same thing with the 5 minute. So, and if I did get stopped out with the 1 minute, even and the 3 minute, I still would take a trade with the 5 minute chart. And that would, I'm going to stick with that one trade per time frame. So here's the break above 67. Here's that first red candle, and I added at the break above here. So here we have 67. So the most I ended up getting in was around 67.50s. And then we had a nice push up to 69. So that's about $1.50 move. And then I scaled out. I ended up scaling out at 68, about 68.40s, I think, and then also at I think 68.70s. So I have to check exactly the orders, but not exactly the highs, but I still had over $1 per share gain, and it ended up being a nice trade. And then here you can see a big red candle. This would be, I think, a bearish engulfing candle, which is a very negative signal. But anyway, and that was my trade. And you can see here it's leveling out. The only negative thing that I would say about my trade is the volume. I was seeing that volume increase, which is why it gave me confidence to take the trade. But it wasn't the highest. You would prefer this to be higher than the highest volume. You can see it decreasing, but then here it increased. So I think if we had more volume, I think this would have been pushing up a lot higher. But there's no way to tell why, but that is the case. So overall, I'm happy with the trade I took. And I think part of it is even with the stock not being at the highest volume, you have a lot of people potentially shorting the stock at this level, and possibly even the $67. Uh, Actually, this is about 67s right here. So you probably have a lot of people shorting in this area because of this high and also the whole dollar level. So as it broke above, there's potentially all those people shorting stopping out along the way. So that's increasing the buying pressure. So that's probably why it pushed up higher. Um, Obviously, not exactly sure. I don't think anyone will ever be sure, but I think that it's a reasonable assumption. Um, and also, it's making a new all-time high, so that attracts more buyers. The euphoria of people seeing, I think, stocks go up. There's the fear of missing out, so that helps push the buying even more, which is why you have to scale out along the way, because then you'll eventually get this candle. So, all right, that's my trade. I'm ultimately happy with myself because I took my one trade for the day, and even if it was a losing trade, I would be done for the day, and I am done for the day. So I'm happy with my trading discipline, following my plan. I would say the only blemish, the only negative thing for my day today is still the volume wasn't as close to the highest amount of volume here. And that's not so much a blemish because volume is very important. So ideally, so I have to be a little more careful with that. All right, again, I just want to remind you that this video and the videos I make is to journal my trades. If you can learn from my mistakes, learn from my good behaviors, that's definitely a bonus. If you have any questions, let me know, and good luck.